Hi, I'm Tim Sustak, SVP Investments and Treasury with Mid-Atlantic Corporate, and this is the economic update for February 2016. Today, we'll take a look at what happened so far this year to the positive economic outlook we had at the end of last year. Well, so far this year, the economic outlook has taken a bit of a beating, at least from the market's perspective. In last month's update, we talked about the volatility that was predicted for 2016, and so far it has shown up. For instance, the Dow has lost almost 1,300 points this year as of the time we were recording this video, and it was down as much as 659 points from the beginning of the year on January 20th. Another fun metric to watch has been the price of oil. It continues to slide, falling below $30 again as of February 2nd. This after starting the year at about $38, falling to a low of $28.35, and rebounding above $33. So, a bad start to the year that seemed to stem from concerns about China's economy has snowballed somewhat as we have continued to receive less than stellar news about the economy as a whole. Concerns are stemming from things like consumer spending being relatively flat despite rising wages and savings at the gas pumps, the strength of the US dollar, weakening economic growth abroad, and persistently low oil prices. When you look at the aggregate of what we're hearing about the economy, it seems to paint a picture where growth is being restrained somewhat, and not one of an economy ready to heat up anytime soon. There are some positive statistics coming out as well, but there just seems to be more negative than positive out there right now for the markets to focus on. So how does all of this affect us? Well, other than our 401ks taking a tumble again, it makes it harder for the Fed to carry out its 4 planned rate increases for 2016, just as we achieved rate liftoff and the start of the tightening cycle that was supposed to help ease our compressed margins. Someone has gone and thrown a wet blanket on our economic tinder. I'll look at future rate increases after the break.
Hi, this is me. I'm a credit union, and this is my neighbor. He's a bank, which means he's got lots of helpers to do his extra work, like check processing, ACH, human resources, stuff like that. Sometimes I just can't keep up. But then I started using Mid-Atlantic Corporate and its family of companies to help me with my back office needs. Mid-Atlantic Corporate helped me with my lending and investment needs. MyCU Services assisted me with my payment processing and technology needs. Solievo made sure I was safeguarded against compliance, hacking, and organizational risks. Aton looked at my balance sheet to ensure financial stability. And Amos hooked me up with a new customized core system. Now that I have Mid-Atlantic Corporate family by my side, I can serve my members and my community just as well, if not better, than this guy over here. Mid-Atlantic Corporate and its family of companies, helping credit unions succeed.
Welcome back. We talked in the past about the most recent Fed dot plot signaling 4 rate increases for 2016. At this point in time, that seems like a tough job to complete, at least from the market's perspective. As of the end of 2015, the market saw a 50% chance for another rate hike in March, and 25% of the market saw the funds rate at 1 to 1.25% by the end of 2016. Now, the markets are only signaling an 8% chance for March and a 2% chance of 1 to 1.25% by the end of the year. Granted, we are only at the start of February, and as we have seen, things can change pretty fast, so we can't count the economy out yet. I think the takeaway is that with volatility like this, we need to stay on top of what's happening with our balance sheets so we can manage through the storm with as few unpleasant surprises as possible. That's the economic update for February. Let's take a look at this month's release dates for some of the more important economic statistics. We'll see you again next month for another look at the economy, and as always, thanks for watching FinAction.